In today's video, we're going to focus on the Bitcoin stock-to-flow model to better understand how much more upside could we potentially see when it comes to this indicator and the very key levels that this indicator showcases to us. Because when we look at previous cycles, there are very key tendencies on the stock-to-flow line here, but also when it comes to the model variance. And let's talk about those tendencies to better understand this current cycle as we're experiencing it right now. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. But before we dive into it, a quick message from our sponsor. Our sponsor for today's episode is Bitfinex, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 250 pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From January 21st until February 21st, you can sign up using my link and deposit $50 and get $10 back, and share up to $10,000 worth of Trump tokens when you trade on Bitfinex. Deposit reward will be distributed on every Monday and Thursday, and Trump trading rewards will be distributed after the campaign ends. The clock is ticking, the countdown timer is underway, and for more information, check out the link in the description down below. Thank you very much, Bitfinex, for sponsoring this episode. Let's dive right into the video, because when it comes to the stock to flow line here, this stock to flow line is essentially the metronome for Bitcoin market cycles, and we tend to essentially upside deviate beyond this stock to flow line, but also downside deviate it below it, and also actually track and follow it closely. So if we look up across time, here we see a period of downside deviation below this stock to flow line, but then we see periods of upside deviating on two occasions in the 2013 cycle, and then in the bear market of 2014 we downside deviate below the stock to flow line, briefly track it and actually try to keep up with it, but then downside deviate with it below it, actually going to these new highs, and then at some point we tend to see a horizontal stock to flow line occur. Here we saw this horizontal line for the first time ever, because generally we were trying to flatten out here. For example, in this cycle we were really going vertically with this line, and then progressively with each cycle we see that it tries to flatten out into a more horizontal, and then you can see that this horizontal became pretty much flat in this cycle for the first time. And this has persisted also in the 2021 cycle. So when this flattening occurs, this is roughly when the Bitcoin halving pretty much occurs. And when we see upside deviation below that cycle, or at least this stock to flow line, we see upside deviation take us to the bull market peak ultimately. And so whenever we upside deviate below the stock, beyond the stock to flow line, there is a very certain amount of days that we spend there before we pull back into a bear market, and then ultimately deviate below the stock to flow line, and then repeat the cycle all over again before we're finally ready to follow the stock to flow line, deviate beyond it when it's horizontal, and then drop below it again to downside deviate, and so on and so on. So let's talk about this cycle then, because we downside deviated, developed this entire bear market structure here, general macro accumulation, and before the halving we actually saw these are the halvings essentially. So what I mentioned in terms of deviating beyond the horizontal line right over here, we actually have the halving impact that halving event essentially impacts and essentially forecasts that we're going to, within a few months after the halving, deviate beyond this horizontal line. So here we had the halving, and whenever we've had the halving, we'd then go vertical and try and follow this vertical stock to flow line. And we've really tried to do that already here as well, but we are falling back a little bit. But in previous cycles, for example in this one, we were really tracking behind, we were falling behind, and then we upside deviated beyond the horizontal here. So let's put some figures into practice, because if we're focusing on the mid-February 2024 horizontal line, many people didn't think that we'd get back there. There was a little bit of doubt, especially when we were at 15.5k, FTX happened, and people were pretty much panicking, and there was extreme fear in the market. But of course, we managed to upside deviate beyond this horizontal line right over here, and as it started to incline, we've been trying to track it as well. And historically, sometimes we track it while maintaining underneath this inclining stock to flow line, which is quite interesting. So generally, if we're to expect history to repeat itself, then we're going to continue to see upside from price action in an effort to try and track more closely this stock to flow line. And history is suggesting to us that we should be able to even overextend beyond the horizontal. But I'm going to talk about in this video why this is going to become increasingly problematic, because if we're focusing on current price levels, that's 167k where this stock to flow line is represented. That's the price it's representing, and we're currently around 100k or so. So this current stock to flow line at this moment represents to us 167k. And the thing about this stock to flow line is it's going to continue to incline and going to continuously represent higher and higher and higher prices. So at some point, we're not going to be able to catch up with that until we finally flatten in the stock to flow line. And in 2021, we were able to overextend beyond the inclining stock to flow line and even managed to upside deviate a little bit. But if you look at previous cycles here, so we've upside deviated beyond the stock to flow line quite considerably here, also quite considerably but lesser here. And if we look at this cycle here, then we've also upside deviated to a lesser extent right over here. And in this cycle, in this cycle, we've upside deviated beyond the horizontal again, a little bit less. And if we actually go and try do this against the inclining price action, or at least the inclining stock to flow line, then that price action deviation is also lesser once again, and even lesser once again here. So I think the moment we break beyond the stock to flow line here, let's say it's going to occur at 167k, then history suggests that we should see a lesser overextension, maybe even lesser than that, and then finally top out. But the problem is that we're starting to slowly get to some really crazy figures. So if history were to repeat itself, then to deviate beyond the horizontal stock to flow line, we'd need to rally to at least 400k. And that's starting to become a little bit problematic, because that would essentially mean that we need to continue rallying quite exponentially, and we might have to go against the laws of diminishing returns, which we see across cycles. Because think about it, if we look at price discovery phases going to 2017, then the moment we break beyond old all-time highs here, we experience a certain amount of growth. And the moment we break beyond old all-time highs in 2021, already we see that the bull market occurs a little bit sooner, or at least it occurs at a diminished rate of reward. So there is diminishing return. And if you look at this cycle also, we're not going to have a copy-paste scenario where we rally the same amount beyond old all-time highs into a fashion which replicates 2021 upside. So we're probably going to have to diminish that reward, and maybe diminish it even a little bit more. Because if we're focusing, for example, on this here, and then we compare that to 2021, then this is essentially a 50% reduction. So we had more than a 50% reduction in terms of reward. So if we're going to copy paste 2021 to this cycle, then this here is going to be a 50% reduction, which showcases to us still that we have upside yet to be enjoyed, even after a 50% reduction in line with the principle of diminishing returns. So we still have a bit more upside, but we still have to understand that diminishing rate of returns may continue to persist also in this cycle, which it means that we're going to still see more upside going forward in the cycle, but we're not going to see crazy, outlandish, outstanding targets that go against this diminishing rate of return, this principle that seems to be embedded in the price action for Bitcoin. And the same thing goes for when we look at the logarithmic growth curve channel. We tend to top out at the top of this channel. This has been the case at least in 2021, and we'll talk about that in a bit more detail. But the top of this channel represents the price actually of 157k. So the most we could see at this moment in the cycle is 157k. Of course, This logarithmic growth curve channel is a dynamic Fibonacci, so we're going to continue to see it inclining over time and over time. So maybe we get to 170, maybe a little bit over 170, but can you see how that becomes a little bit out of keep with 400k on the stock to flow model? So when it comes to the logarithmic growth curve channel, the best we can see here is getting to the top of that channel. But even if we look at previous bull cycles, yes, in 2021 we got to the top of the channel and topped out there. In 2017 we saw the top get to the top of the channel as well. The bull market top occurred at the very peak of the channel, but as you can see here in 2013 we actually missed the top of the channel. And in previous cycles before then, in around 2011, 2012 time, well, we got to the top of the channel. So out of the 1, 2, 3, 4 instances, we saw Bitcoin rally to the top of the logarithmic growth curve channel on 3 out of the 4 instances, barring 2013. So those are some pretty good odds that we will still get to the top of the channel here. Not picture perfect odds because it is 3 out of 4, so that's a 75% chance that we get to the top of the channel here. But we have to also understand in some of the ways that we could fail and not get to that channel top. We have to always prepare and be a little bit pragmatic about maybe we get to this portion of the logarithmic growth curve channel. We don't get to the actual top, but maybe we top out a little bit just below it. That's something really to keep in mind when it comes to reasonable, level-headed analysis. But no matter how we slice it, it still means that 400k is a little bit outside this cycle. And I don't want to be bearish, and because I'm fundamentally bullish on Bitcoin, and over the coming cycles we'll probably get to 400k, we'll probably get to even beyond then. But it's going to take a few cycles. Really important to understand that this upside can and probably will get achieved, but not in this cycle alone. It will probably occur over the coming cycles. So we have to also taper our expectations for this cycle. And I know that there are loads of fundamental catalysts, and there are going to be people saying that, well, I'm ignoring all these strategic reserve things happening, pro-crypto president. We always see positive catalysts in every single cycle. Every single cycle has had positive catalysts, and maybe we're seeing the most positive catalysts take place right now. But at the same time, we have an increasingly mature and more, there's more institutional interest in this cycle than ever before. So maybe we have to have increasingly really massive positive catalysts to move price up by not that much as compared as in the past. Something also to keep in mind. But at the same time, we have to also understand that these massive targets may have to take a bit more time to get reached, maybe 2 cycles, maybe 3 cycles. But we have to understand that diminishing returns is a thing, as evidenced by this chart. So if we have even 50% reduction, still it means we'll see a bit more upside going forward, but it is a little bit limited. So if we're looking at these diminishing returns here, then we also see that the upside deviations beyond the stock to flow line, they are tapering. And even this one, when it comes to the horizontal stock to flow line, we failed to we barely deviated beyond that horizontal moment. So if we end up upside deviating by really a fraction of what we before upside deviated in the past, and here is probably a really good example as well. If this used to be the upside deviation that we see beyond the horizontal stock to flow line, and then in the end in 2021 we see just this, then maybe in this cycle we're just not going to deviate beyond it at all. And that would be in keeping with the diminishing returns, because we're probably going to miss out on revisiting these highs. And maybe the way that this is going to continue to progress is that we're going to continue to fall short of revisiting the horizontal line. In this cycle, maybe we'll fall short by this amount. In the next cycle, we'll fall short of the stock to flow line by this amount. And maybe that's going to continue to progress because the reward is going to continue to diminish. So something to keep in mind. And the last thing maybe is that this model variance here, the model variance has been quite useful in denoting bull market tops. But in 2017, we topped at this model variance, and that was the same sort of level where we topped in 2013. But notice how in 2021, this model variance has been a little bit, it's been at a lower level of model variance, considerably so. So we're getting very close to that model variance right now, but what if that model variance has to get a little bit smaller? What if we actually have to see model variance get to this peak? Because remember, we actually pre-halving peaked in Bitcoin's price action around the halving right over here. So if this model variance is where the 2021 cycle peaked, then, and this is the pre-halving peak for Bitcoin, and we've actually rallied to new all-time highs since then, maybe this is going to be the model variance at which we peak at the end of the day, at the end of the cycle. So maybe we need to continue to curl up a little bit. But how do we reconcile this curl up and model variance, and at the same time understand that maybe we won't reach this horizontal? If we reach it, that would be phenomenal, and I'd be really happy. But it does look like we're probably going to fall short considerably of that region, and there are other targets on really valuable time-tested metrics like the logarithmic growth curve channel that are suggesting to us that maybe this is going to be the absolute maximum that we'd get in this cycle, which is still quite a lot. From 102k to 157k, that's still a pretty decent return nonetheless. But we have to be a little bit more level-headed about what's possible in this cycle, and understand that maybe the stock to flow line and the general stock to flow model, it can still be a very useful indicator for understanding where we are in the cycle. So deviating and creating blue colors here is where we see bear market bottoms, and then orange portions of the cycle are where we get really close to a top, and we are in the orange region right now. Maybe we have a little bit more time left in the orange region. We tend to spend a bit of time there, and at best we'll even get green. We'll get green right over here. That's probably where we're going to ultimately top out in the cycle. So this color coding is still going to be quite important, but we're probably going to see that color coding far below the horizontal here, far below 400k, and more in line with what has historically been the case, which are diminishing rates of return across cycles. So a bit more upside, but it is limited, and probably getting us closer to the top of the logarithmic growth curve channel. So still falling behind and falling short of 400k, but still decent reward, because this is an inclining Fibonacci, and if we propagate it into the future, it gets us closer into 170. Maybe by September, October 2025, we'll get to 160, 170 maybe, and that would be the absolute maximum that we could see from Bitcoin's price action in this cycle before it actually finally tops out and goes into a bear market cycle for at least a year, or maybe even a little bit longer, as we saw in this cycle. This cycle, we saw a 390-day bear market retracement. It was shallower, but it was a little bit longer, and so maybe, just maybe, this will be the absolute maximum we see from Bitcoin in this Bitcoin bull market before we transition into a bear cycle once again, as per history. Thank you so much for watching this video on the stock to flow model. Hope you enjoyed this one. Hope you found it educational. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.